Hello everyone, welcome to my video. So in this video, let's analyze the chart of Nifty today. What happened? So yesterday we had an expiry video and I also shared a video on expiry day trading. And what happened today was actually today market recovered from where it left yesterday, and it went, for example, the market expired yesterday on 24,600 levels, and from there today it opened above CPR. We had a narrow CPR, and so it recovered and then found its resistance at 900 levels, and then it consolidated there. It was stuck inside a range. If we see why it's between 24,500 to 25,000 is because they are eating the monthly option premiums for people who are holding longer positions. So unless you are a scalper, you should avoid trading unless they break out out of this range. So let me switch off the indicator to explain what I mean. So the price has been actually oscillating between, let me switch to 1 hour chart. If you see, the price has been oscillating between 25,000 to 24,500. And so if I zoom out a bit, what I see is that the Nifty actually shifts from one range to other. For example, in the May 7th, between May first week, it was trading within this range, 24,500 to 23,900, and then it did not give an opportunity when it is going to go to the next band. On May 7th, we saw a huge price breakdown. It gave an illusion that it's going to fall and go to the band below because of this India-Pakistan war and news. People would have bought put option in panic, and but what happened the next day was that the price opened gap up, and all those puts would have gone to zero here in this place, and it did not give us any warning that the price will go to the next band, and it entered the next band, and now it's stuck between this band. So the market is now within this box, and gap ups and gap downs are just the part of the seller's game. So unless it breaks out of 25,000 or 24,500 zone, you can expect both long-term calls and puts to decay. But if you are using 1 hour chart, you will also find some clean trades. For example, on May 12th, as soon as you saw that this band got broken, you could have entered, you got a good move until the next band. And similarly, as soon as you found that there is a resistance here, you could have taken a put option until the next band. And we also see some bull trap here. For example, this big green candle gave an illusion that it broke this band, but it reversed. And similarly, this is not the resistance, but usually people think 25,000 is the level, and this was also a bull trap on May 15th. Just gave an illusion that it's going to go to the next band, but it reversed. So these are the zones. When it actually try to cross the bands, you get a better trade. Even if you lose small, but if you win big. The idea is to mark the zones and wait for clean breakout or breakdowns. I hope you learned something, and this video is for educational purpose only. I'm not a SEBI registered advisor, and you should consult your financial advisor if you want to make any trading decisions. Thank you very much.